Good evening. Today is Friday, June 17th, 2016. Market already closed, so what you're going to see here is my analysis on what I did today. I stayed on it pretty much all day long. And you're going to see here the opening, and the opening here is lying. This is not real. This is one of those days where Options Express website falls short. This is not accurate. And see, pay attention. This is the closing yesterday, and this thing is saying that the open is minus 11 cents. You cannot do minus 11 from 208.50 to below 207.50. The drop before the market was $1 and change. So I just wanted to show you that, and we had pretty good volumes right off the bat. Okay. With that said, let's take a look at the way the charts looked as they closed yesterday. This is the pre-market, 25. And I understood yesterday, and if you watch my video, I said I just don't trust this upside pattern to be able to drop the price as a continuation on opening. I just didn't trust this upside divergence on the hourly. We were long on the 15 and we were capped on the 5. So a continuation was really a possibility. The 208s or perhaps the 207.50s probably would have been my choice. Didn't do that because it seemed too risky. So now we know that price opened to $1 drop, so here's the opening. There you go. So right on opening, you are at 207.12, and take a look at the hourly, flattens. The 15 turns, and obviously the 5-minute drops and the 1-minute drops. What would have happened had we entered a position on the 207.50s prior to the close? 207.50 books. Now, if we take a look at the range of movement, I think, because I'm thinking, see, this is the end of market yesterday. This is Thursday, and this range right here, this is the 15 minutes after 4 o'clock for the ETFs, okay? This is the opening. And the options over here moved very little in comparison to the range of the move from yesterday. See what I mean? From 208.35 to 207.12, that's more than $1. 207.35 would be $1. Yet, Options Express is not showing me that range of movement. That's why we have a discrepancy here with the marketing opening picture here. Now, if you take a look at this, it looks like there was movement towards the downside before the close here. What if we go here? And let me add these guys to the watch list. See, this is the market opening, and this stopping over here is this stopping over here. And then you have the move. I don't understand. I don't understand. Let me show you something else. This is Trading View. And this is the opening. This is the same topping that we're talking about. Right? Right here, that's the 5. That is the way the 15 looked like. See, this is the way the 15 looked like. This is the 5-minute with this downside pressure pattern that almost looks like a divergence right here. Yeah, I see the drop over here. I don't understand, but it doesn't matter. Let's just focus then on the return. So the return over here is bullshit, but it's still 36%, from 68 to 93 on opening. Then, let's say that you had been on that move. Would I get out right there? 9:35, the 5-minute drops. The 1 minute is starting to create a little technical bottoming. No, I wouldn't get out here yet. I'm going to let the 1 minute create a pattern. This is the context. Take a look at how the 15, take a look at the 15-minute interval, take a look at that 15 dropping. The 5-minute continues to drop with every single interval. Over here, that 5-minute is starting to relax, but it's still pointing down, and so is the 15. So now go on an exit. The 1 minute is pulling back. Take a look at the 15, still down. Then you have the drop. That's my exit right around here. I would say around 10:35. I'm packing my bags. And that gives you 120%. Right? And so that is a pattern. And now with this continuation, we introduce a pullback and continuation on the 5, which is weakness, and a pattern on the 1. Take a look at how the 1 establishes itself there. We are establishing a bottom. Then you have a continuation that gives you the little bit of higher high by 11:13 or so. 11:05. The price pierces through those bottoms yet again, 11:15, and that takes you here. But I would have been very happy right there, and that's my exit because I know I'm establishing a technical bottom on the 5. On what context? Well, the hourly, let's not forget, is short on the drop, and it's establishing an upside divergence with a double whammy here. Now, this is happening in the context of a daily chart that is really pushing down. Here's the context again. See what I mean? So, have we reached the channel regression? No. We didn't hit 205 because we have too much upside over here, so this is not going to let it play out. This is setting up a reversal pattern. Whether or not it's going to play out, it's irrelevant. If you were on that particular move to the downside, this is time to get out. And then take a look at how the 5 establishes a bottom. And one of two things can happen over here. One is the price just goes up from here. I just don't like the momentum on the 15, but it is a divergence to the upside. And the other one is that we establish a technical bottom on the 15, we pull back, and then we have a retest. I just don't like the context, and that's why I didn't do anything. We take a look at how the price goes up. So the upside gets established. And I'm looking at this, and the 15 turned. Take a look at how the 15 turned even without a positive divergence on the 5 out here. I mean, the whole thing is upside, but we don't have a technical upside divergence in here to turn it. All you have is a little bit of a pullback, and that does the trick at around noon. Now take a look at how at noon, the 60 hardly advances, and it's staying within upside divergence territory. So the upside gets established, then this thing runs out of steam. This is the one of two things that can happen on the technical bottoming of the 5. Either the price goes up or you have a retest. The second thing that could happen is that you don't have a retest all the way down because we just don't have juice to create it. But you have a pullback because the lower time frames have to cycle down. Take a look at how the 1 minute runs out of steam to the upside, and it's rather long, comparing price with indicator. And so it down cycles, take a look. And this is where I'm thinking that 206.50s are going to make money. And I actually did something interesting. I entered a position virtually. I didn't go with real money because I'm a little suspicious about the whole thing, and the daily is pointing down with a lot of power. What I did say, that 1 minute is done with its downside. It's long. This is the retest that never happened. The 15 is already pointing up. The context is an upside divergence. This thing wants to play out. And so I did this. I entered a virtual position. So I went to my virtual account and I established it at $10,000 to start anew, to start fresh. And I went and pulled out the options chain for SPY for expiration today, June 16 calls, third week expiration. We're looking at the very first options out of the money right here. The 206.50 calls, they are 27 and 28. So I choose those and I come over here and I say, at market, I'm gonna get 100 contracts. Here's the bid and ask, 27, 28. Here's the preview, 150 in, 150 out because this is a virtual account. And so boom, order placed at 12.59. So we come up over here and there's the order. And I just entered my own little text that I always do, 12.59, today's date, 2,900 in, that's 2,900, it's 2,800 minus the $100. It's negative $100 right on the entry because you're down the spread right off the bat. See, 29, 28, that's the spread. Bid and ask. So the ask is what you pay for them, and the bid is the current price that you can sell them for. So if I sold at this particular moment right after my entry, I would lose $100. So there you go. A picture of the actual context of what the stock looks like, right? And minus 200 by 108, so it has not started its trek to the upside, and there it goes. See? Up we go. This is the options chart. Virtual trade, this is the entry right here, just before 1 o'clock at 12.59. Boom, I'm up $400 by 111. Take a look at how on the stock chart, the price is actually going up. You can see the price going up, $500. Look at the options chart over here, more upside. Look at the larger context. So we're playing a pullback on this trend established by the daily. So this thing, because of this upside divergence, wants to pull back. Now, if we take a look at the channel regression, the channel regression here says that it can pull back about 207 or so because of this support. And take a look at how the 60 is turning. The 15 is on the way up. We are up $600. Options chart again. Stock chart again, more upside, right there, $700, more upside, $800, a little regression here on the options chart. This is our entry. You can see how we're trekking up, little regression there, $900, that means that we advance higher, right? Now this is topping a little negative. I'm not liking this very much. And that 5 minute looks weak to the upside. So I'm starting to be a little concerned about the sustainability of the upside. We're up 1,000. This is the options chart, pullback, and we're continuing. Price is meandering. Then we pop to 1,600. Take a look at the options. Boom. Take a look at the price. Boom. Right, take a look at the 15. Take a look at the hourly turning on its own context, upside divergence there. 1,700. Down from 1,700 to 1,000, the options drop, the price drops. Down to $100. From being up 1,700 down to 100 because of this drop. Look at the 1 minute and the 5 minute. This is a 5 minute kind of bullshitting around, and this is now topping negative. I'm not liking this. The price starts resolving to the upside, and that's why after the catastrophic Dropped from $1,700 to $100, then back up. We're at $800 already. Price is striking up. $1,200. More upside here. Take a look at the 5-minute turning up. The 15 has direction to the upside. The 60. I'm not liking this. That's weakness on that. 5. We're up 1,300. This is the options after that drop. Take a look at how that drop took us right around the same line of our entry. Hence, we were only up $100 at some point. We pop to the upside. Pop to the upside over here. And at this point, I say I'm out. And I sell my position. And I took the account from $10,000 to $10,995. So I made $995 or a 32% return. In other words, my entry was $3,052.28 and my exit was at $4,042.62 for a $995.34 profit or 32%. Not too shabby. It was not a great explosion to the upside, but it could have been. It just wasn't. But I was able to identify weakness and I said, I'm out. I'm just giving you a few more charts over here, a picture of what this thing continued doing after my sell. Let's see. I sold my position at 224. Okay, 224. That's my position being sold right there. Sold at 42. So if you go over here to the analysis, entered at 29, sold in 42. Buy to open, sell to close. Okay, and then the price continued the upside. So that was interesting, and I thought it's possible, but risky, and I didn't want to participate on that risk. So I got out. I could have stayed. This thing made it to 59. So you see over here, you see the virtual trade, and the percentage return on virtual is 32. The paper return from 29 to 42 is 44%. The paper return over here is 96%. So probably if I had stayed, I would have made, this thing went from 29 to 59, and every point is a $100 bill, so 29, 39, 49, 59. That's $3,000. So I would have made $2,700 versus about $1,000 that I made. I just didn't like it, and I got out because it was a little risky. And let's not forget that we were trading something within the context of a downtrend. We're trading the pullback, but this is not looking very healthy, and that's why I said I'm out. Now take a look at what happened shortly after that. See how the price collapsed? Collapsed. This is close to the end of the market. This is where it went. This is how it collapsed back down, and then down to zero. That is the end of that. Now let's go back to the actual charts for the price. So this is around my entry, and I entered, and I kept it going until I identified that weakness, and this is right around where I sold. And you know the rest. It was a rather boring Friday, because right now we have opposing forces, and that's the end of the market, and that is we're in the middle of this trend to the downside, but we have support over here, and so we're fighting that trend. How about VXX? Here's VXX, rather boring. It was interesting here at the end with this pattern, and then take a look at how the 1 minute over here popped. The 1550s probably made crazy money because it was very sudden, very fast. But we're in the middle of this negative divergence on the 60 against this trend. It's very interesting. Take a look at that daily, not conceding defeat. Isn't that interesting? How about Qs? Also had a little bit of advance to the upside, but very little. Take a look at the daily and how poised that daily is. That's another thing that you got to pay attention to. If we go back to SPY, we're trying to trade a pullback on a very well-established downtrend. Let's not forget that. Let's jump to Russell. Russell was also pretty boring. Didn't hold much of a candle against this huge direction and poise. See? Diamonds. Similar situation. Cleaner upside divergence in here on the 60. So when this 5-minute turn, this is the moment where you would have said one of two things can happen. The whole thing starts here, or you have a retest that never happened. The one is it starts here, and the other one is the retest. This is the reason I entered my position on SPY. Now, it would have been interesting to understand this here and say that 5-minute is capitulating and it's turning on this context. Here's another look at this thing. Take a look at the support on the 1-minute chart coming in here, right here. This is very obvious. Right around here, then you have this drop. The 5-minute then turns. So on diamonds, the narrative over here is that you have the 5-minute turning on the context of a very nice upside divergence on the 60. And so again, I present you with the 1-2 punch, and that is one of two things can happen. When the 5-minute turns onto its upcycle, the trend establishes itself to the upside. So you're in it. The number 2 scenario would be the retest. We just didn't have enough energy for a retest. So what we have is a pullback, and the pullback happens because the 1-minute has to down cycle. So the 1-minute down cycles, and this is the very pattern that I entered on SPY to the upside, because I understood that the retest was not going to materialize perfectly because we just didn't have enough energy to drive the price to retest the lows. So it just pulled back, and when the 1-minute down cycle ends, then you have the continuation, and you have one of those lackluster 5-minute divergences. Another thing that took place here is that the 15-minute turned to the upside here, and so a position over here could have been achieved on, say, the 176 calls, and those probably move nicely had you stayed from here. Just as much as SPY would have been much more profitable entering from here rather than from here. I want to actually see that. We're looking at the 206.50 calls, right? So my markings are gone. My markings are gone. What a tragedy these charts are. They erased everything I did. And take a look. All of this was here, and these guys just erased my stuff. And I just refreshed, and it's gone. This is bullshit. And so what I wanted to see, so the entry, had we decided to enter here, 1135. So we go to 1135. Yeah, right around here. Marginally better. The thing is that the retest over here, I explored this yesterday, is brutal on the options, not so on the price of the stock because it's stock, but the options do retest basically at the same levels because it is Friday and we are dealing with an asset that is attached to time premium decay, and the decay is very accelerated on the day of expiration. So there you have it. What's next? I think this week was incredibly productive. I really honed my skills. I just proved with this virtual trade that I can do this. The market was just really bullshit today. Let's just wait for the next good pattern. We're gonna make money here. This is it. This is it. I can feel it in my bones. So I leave you with these thoughts. I'm not even going to explore any other tickers. It doesn't matter. Let's see what happens when we come back here Monday, June the 20th. Until then.